Hi, welcome to Market Alert for Friday the 16th of February 2018. Yesterday in the pound it was one way, as you can see at the beginning of the session. You've got all of these buying bars in here, three consecutive ones, some weakness at the resistance level there at 140.50, which is a major level for the pound as we've known before. And then we see the market testing here. I had a bit of a short there that failed because the market came back above that 140. Some selling followed by some buying followed by some selling. Selling disappeared here, as you can see the volume below average, and then the market's been free to move back to the upside on the overnight. And in the daily we're at a crucial area here at the 76% from this high to this low. And if the market takes this one out, then what you want to look for is the market from trading from the recent high down to the recent low, and you'll see a doubling up there of the fibs, and you can see there the market just at this 62% retracement there, and then of course you've got the 76 next, and then the 76 from this one that we've just measured up as well. So if you keep an eye on those, you'll find the market actually stopping and finding resistance, and will need major volume to drive through. It's always important if you're trading intraday to actually keep these levels in mind so that you can actually use them to your advantage. If you get a sell signal in these areas, you'll get a short-term move to the downside, and then followed by a reversal, which you'll be able to measure 76% and then move back to the upside. And speaking of the upside, yesterday in the Dow, after a bit of a soft start, we saw the market sell, then buy back, sell, then buy back. The buying disappeared and down went the Dow, found a bottom here before turning around and then moving back to the upside. So having dropped a decent 300 points there, you see the market then reverse, and as I said in yesterday's Market Alert, they want this market back up. Eventually it will all fall apart and it will crash, but at the moment it's business as usual. To me, it feels like 2007, 2008, as I said in last week's Market Alert. And I'm not the only one saying this, actually. I don't know whether I can find this or not. But I noticed this morning somebody else said the same thing. Oh, here you go. That was a spot of luck. Normally can't find these again. But here you can see this market's nuts. Two good C shades of 2000, 2008, because everybody is already invested, and that's spot on as far as that's concerned. And that's why it's important to draw these levels in. 62, 76. Now this is going to be the crucial area. If this market comes up and fails to close above here and then starts to turn, then we could see a resumption of this weakness that we've seen here during the last week. Otherwise we're off up above the 76% retracement and back to the all-time highs, and then back through there as well. Now the implied volatility is pointing at this too. This has dropped off quite markedly in the last week. We've gone from 1648 yesterday to 1588, 2592 being the peak at the bottom of here. So anybody that was buying puts would have been severely stuffed. I've said before, if the implied volatility increases by 100%, you're far better off selling the put options than you are actually buying them, as that's the way it works. Sell the froth to somebody else and pick up the premium from doing it. So here we've got a bit of resistance, and again, let's see if the market goes through today. Any news to drive the market through? We've got retail sales from the UK, housing starts, building permits, import prices, that's for the US. Everything else is 130. Let's just move down a bit, see what else we've got. Building permits is the big one. That's to show a slight decrease. And then prelim UM is the one we couldn't see, but that's medium impact. So big ones today. GBP 930. This is to show an increase in retail sales of 0.5% from a previous of -1.5%. So we'll see if it will do that or not. Meanwhile, in Bitcoin land, this moving up sharply yesterday, breaking the 10,000, but as you'll see now, we're just currently back below this at 9845. And the reason for this, if this is on here or not, but somebody came in and bought 400 million of Bitcoin. See if we can just spot that one. I did notice it earlier. Also there that home prices hit record highs. I thought that was it then. Here you go. Bitcoin tests 10K as mysterious crypto trader dip buys $400 million worth, and that was according to this item is what moved the market higher. And this is the code of the buyer, and of course because it's anonymous on the cryptosphere inside of the blockchain, you don't know who's buying and who's selling, but obviously somebody wants to track down and find out who the mystery buyer was yesterday. And also another thing that came to light yesterday, this by Ambrose Evans Pritchard: the Fed can't legally save the world financial system, another Lehman crisis. The article is a good one, but unfortunately, because I don't subscribe to any of the mainstream papers, I couldn't read it all. But there was a change in legislation in 2008 that now prohibits the Federal Reserve from bailing out the likes of the Lehman situation that we had in 2008. So not the only one to say that either. Again, on Zero Hedge, there was somebody else who was saying the same thing as well. And here it is. Brandon Smith: central banks will let the next crash happen. And that's again ties in with what Ambrose Evans Pritchard is talking about there in the Telegraph. Right, that will do it for this one and for this week. If there's anything to report, I will let you know. Other than that, as ever, thanks for watching. See you in the next one.